Good morning and welcome to the Daily Stack. Today we have Jeff Walton, Chief Risk Officer at Strive. For those that don't know Jeff, he is the person that started True North, which we love as, on the media side, pure conviction. So those that don't know the story, I believe it's 2024, you started diving in. You started talking about Mstr. This is an underpriced asset. They're buying Bitcoin, which is pristine collateral. This is before the term pristine collateral probably was even coined, or it might have been coined on Twitter one time, but no one had really made it into like print yet. And from there, all of 2024 into 2025, you start talking about it. You're on live streams, you're creating content, and you're all in on strategy. This guy, Michael Saylor's buying up Bitcoin, buying way faster than anyone else. And you're seeing that. So you go all in. Come to today, you're Chief Risk Officer at Strive, one of the other US-based fast-moving Bitcoin treasury companies that also is getting and has preferred equities as well in SATA. So we look at something when we had Matt Cole on the stream, and there's so much we can dive into there. But my esteemed co-host Halston was down at Strategy World and True North event. So Jeff, want to start out and say good morning, and then let's also just recap True North last week. It's fresh.
Yeah, absolutely. Let's dive right into it. Yeah, the last couple of years have been a complete whirlwind in my life. About a year ago, I had quit my reinsurance job knowing that I wanted to go work in Bitcoin. And I've been working at Strive for less than 8 months.
Yeah.
So yeah, it's just been a complete whirlwind, following what strategy is doing and then emulating the best idea in all of finance, which is buy Bitcoin, put Bitcoin on a balance sheet, and figure out the best way to take a capital asset and leverage the capital asset to acquire more Bitcoin capital. So yeah, it's been a crazy ride. Super excited to be here, and yeah, let's jump into it. So True North event last week at Strategy World, which was an incredible event. I mean, it should have been called Stretch World, because that was the hottest topic of the entire week, was STRC and the digital credit products, or maybe digital credit world. Maybe that's probably in the future. But we had this event. This is our second annual event, the True North event, that happened on the Monday prior to Strategy World. And our goal was to grow and keep the community alive that's talking about MSTR and the evolution of the digital equity, the digital credit. And our goal with this event this year was to make it you had to be there type event, and building this community and shining a light into what's actually happening behind the scenes with the people that are operating in the business world. And one thing that became very apparent to me when I started working at Strive is we would have conversations with several different partners, whether that be, our custodian partners, our trading partners, our banking partners. And I was astonished at how far ahead and how advanced some of these companies were. And you'd have no idea, like, just by operating on X and looking at, trying to peel off the news of what's happening on X, you'd have no idea that these people were actually building these things or working in this space. So our goal was to shine a light into some of the partners we work with and provide perspective that is difficult to get elsewhere. So, for example, one of the conversations we had was with Matt Gannon, who's a managing director at Barclays. I think he's got 8 followers on X, or he follows 8 people. He's just a total anon, but he's a lurker. So he understands everything that's happening within the ecosystem. And so we had a conversation. He works at Barclays. He works investment grade credit. And he gave us some perspective on what it was like to launch the perpetual preferred equity instruments. And what was the evolution? Like, how did we get here? If you're used to, working on investment grade credit, how did we get to a perpetual preferred equity with strategy? And the fascinating perspective there is the instrument that actually came to Barclays at the very beginning was completely different than what was actually launched in February. So February of 25.
Yeah.
And there was iteration that needed to happen back and forth. Obviously, the instrument itself was significantly more complex. It was generated and built with AI. And then in reality, like going to sell this type of instrument, you needed to think about like what can you actually get across in the market, and how will this be viewed in the marketplace. So there's some reality that needed to play out there. So there were several conversations, and we don't need to recap all of them, but it was fascinating, the general theme and the vibe at this event. Everybody was incredibly positive. You would have no idea talking to people that the price of the underlying commodity is down 45%, and the price of the equity from all-time high is down 75%, and the Bitcoin treasury ecosystem is absolutely hammered. Like, there was no fear in the audience at all, and it was excitement about the future, and that carried through the entire strategy world event as well.
Yeah, I have to completely agree with that. Strategy World was just the energy was there. It was, I kind of like going to these events during quote unquote bear markets, because the real ones show up, and the people who have strong conviction, they're there, and they're just as excited as when Bitcoin was at 125. So yeah, Jody, you missed out. We'll have to have you next year.
I even enjoyed it in Orlando, which is not, I mean, no hate on Orlando, but it's typically a different, scene than Vegas.
Yeah.
So I want to make it next year. Hopefully got to plan better with the wife on who's going to watch our kid and let me pop down to Vegas.
We'll do it.
It also, like, having the big Bitcoin conference in Vegas kind of hurts, because I'm like, all right, I'll need to go to Vegas twice in 2 months. And that conversation plays out a little differently. So for you guys, you both mentioned Stretch World, such a central theme. What was, you obviously both tied in, and about Stretch, but what was maybe something new that you got out of that, of either externally people like saying about Stretch, or how it's being implemented, or adoption, or conversation shifting?
Yeah. I'll let you go first, Jeff.
Yeah. So several things. Very, very interesting, the bank involvement at Strategy World. You had Morgan Stanley, you had Citibank, you had Barclays in the crowd. There were several banks that were there talking about, how they're offering Bitcoin services and how they're starting to see these digital credit instruments. So that was fascinating, point number one. Point number two is companies are putting digital credit on their balance sheet. That's fascinating. So and it's not like long-term investment capital, it's short-term capital, like 1 month capital, 3 month capital. And so why does that work? And that was what I've been digesting throughout this entire process. So it really, in my mind, all comes down to the liquidity profile of these instruments. This is something I had a few conversations with Saylor about, just talking through liquidity and like the incentive structure, and who's buying these things and who's selling these instruments. And the fascinating thing is, if you compare this perpetual preferred equity to any other historical perpetual preferred equity, the volume on this instrument, on Stretch alone, is like 100x any other perpetual preferred equity instrument. So historically, if you were a capital allocator and you had balance sheet capital, if you had 1 month or 2 month capital, you would deploy that capital into something that's incredibly liquid, because you need to get that capital back out and use it at a future point in time. So you kind of have this decision process. Like, if I have short-term capital, what do I put it in? If I have medium-term capital, what do I put in? If I have long-term capital, what do I put it in? And historically, you would have to give, like, if you wanted higher yield, you'd have to give up liquidity. Mm-hmm. And if you wanted liquidity, you'd have to give up yield. And now you have this instrument, which is completely turning that entire decision-making process upside down, because you have high yield and you have liquidity. Fascinating development. You go look at, like, I put this on my Twitter. You go look at the perpetual preferred equities offered by Bank of America, Wells Fargo, JP Morgan. The yields are like, the effective yields are 5.5% to 7%. And the liquidity, they trade like $2 million or $3 million a day. Stretch yesterday traded $200 million. Yesterday.
Yeah.
So it's 100x the liquidity. So why is that important? if you're going to put an asset like this on your balance sheet, you need to know that if I do this in size, I need to be able to come out of it without moving the price. So if you were to do that in any of the other perpetual preferred equities, if you're going to go trade $100 million, but it only trades $2 million a day, you're going to nuke the price of that instrument, and there's no way you get out of it. So the decision-making process behind the scenes, when you're thinking about a yield product, historically, you'd have to hold that yield product through duration in order to get that yield. And now that equation has changed. And you can see it by corporations that are thinking about putting this as a treasury asset for short-term capital on their balance sheet. That's a big unlock.
And you've talked about the PG&E preferred equities, and this is like the California public utility, and right now we're going, at least in the Cascades, going through a historically dry winter. So there's a higher risk of fire, later in the year because you don't have the snowpack that's melting and providing more water. And so you look at that, and I'm assuming, I'm not going to go look it up right now, but I'm assuming those PG&E preferreds aren't very liquid. So if you try to get out of that when you see there's no snow falling, you're probably going to move the price, which the general public doesn't know about preferreds. No. I think that's the general takeaway is like, you're not creating a new category with Stretch, but it's a very unknown niche financial product that average retail is not aware of, or, just don't know much about.
Yeah. Yeah. I'd second everything Jeff just said. I think that was my biggest takeaway too, is I was pretty surprised to hear, 3 public companies saying that they're adding Stretch to their balance sheet. I think Orange BTC was the first. And then you have Prevalon and Anchorage announcing too. So that was definitely, huge, just eye-opening moment for me. And I think for everyone at the conference. And Saylor sees this as a $50 to $60 trillion opportunity. And I think he's right. He's been right a lot of the times with this. And yeah, I mean, the big takeaway is Bitcoin as pristine collateral. That was the overall sentiment in the room, I think. And yeah, definitely vibes were high. It's one thing to hear speculation about banks maybe getting involved in Bitcoin and maybe building Bitcoin products. And it's another thing to be sitting there and watching Morgan Stanley make big announcements on stage about, integrating Bitcoin into traditional finance. So, yeah.
So historically, to your point, Jody, the preferred equity market used to be a market, like a capital market of last resort. It was almost like a forgotten market where you would go and access that pool of capital if you had no other option. You're like, I already tapped out the debt markets. I'm over levered. I'm totally screwed unless I get an equity infusion that can help my company survive. And so historically, it's almost always been defensive. And now here it is on offense, right? You now have this instrument, you put a ticker on it. It's a publicly traded ticker. It's got a nickname. It's got high liquidity. And now you've got multiple instruments that are trading in the equity market. I mean, one of the most fascinating things, even just thinking about my company, when I go talk to my friends or family about like what I do, I say, we have 2 publicly traded tickers. Like, how many companies have 2 publicly traded tickers? Like, that's interesting. What do you mean you've got 2 publicly traded tickers?
The ticker per head count, like, you guys have to be less than 50 people, right?
Yeah, we've got excluding Semler, we've got 31 people.
Yeah,
so like
wow.
ticker per head count is huge. Yeah, probably outpaces strategy, I think.
Yeah. Oh yeah.
Wow.
Exactly.
Yeah.
Yeah, like 1,500.
1,500. Yeah.
So like, why does this work? Which I think is something that I've been trying to digest a little bit as well, and maybe unpacking some of the conversations I've had with Saylor. I asked him, who's selling Stretch at $99.98? Which I think is a more fascinating question than who's buying it. Like, who's selling it?
Yeah.
and what's happening here? And so if you ever if you ever go to a conference and Saylor's there, you'll notice that he's on his computer all the time. He's got TradingView up, and he's watching his instruments, and he's watching the tape. He's watching each trade and how it's like filtering through the market. And the fascinating thing here, you could watch it like a movie. I've been watching it with my instruments. Like, you can you would watch each trade and try to digest like what's happening and digest how communication impacts your common equity and your preferred equity and thinking about, credit quality and all these things. So fascinating thing here, there's likelihood that these instruments are starting to be used as collateral in other marketplaces. Mm-hmm. So for example, Saylor was telling a story about he saw a $40 million market buy of Stretch at $99.98, or market sell. Sorry, not market buy, market sell. Why would you market sell $40 million of this instrument when like if I just sell this over, an hour or two, I'm going to get out of this $40 million and not have any movement in the principal. And so one of the rationalizations is this must be being used in DeFi, and somebody got liquidated in DeFi, and that liquidation resulted in a $40 million market sell of STRC. Like it was a market sell. Like typically you don't see a move like that on something that you could just tail your way out of it. Yeah. So it's fascinating seeing the evolution there. There's also a likelihood that somebody wanted to stress test this. Like what would happen if there is a $40 million market sell? And yeah, maybe I'm willing to take a $1 million loss to figure out like how this instrument trades with high volume, like $40 million. And the most interesting component about that story was as soon as the price dropped on the $40 million market sell, went from like 99.98 down to 99.40, it was instantly snapped back up. There was somebody on the other side of the trade that was eating it, going up to 100, because they know that strategy isn't selling the instrument below 100. So there's incentive for any computer or algorithm to sit there and snap it up and arbitrage pennies when they know that there's incentive to keep it trading at $100.
Yeah. And that's probably the easiest arb trade that you could do, because you're not like scanning another market to see what the price is pegged at. It's just like anytime it drops below 100, scooping it up. We could get, our Claude bot probably to do that today.
Yeah.
We just probably don't have the size or want to give an AI agent, $100,000 to be able to make enough money to make it worth it.
So why would you do this, right? Why would you do this? The downside is you hold an instrument that's paying you 11.5% yield. The upside is it snaps back to 100. And like, why does that work? Because the relative risk profile of this instrument relative to anything else in the market is so much better. Like the risk profile of this instrument, it's better than any other debt instrument in the entire market from a like relative risk standpoint. And I think that's where this makes sense, because the downside risk is I just hold an instrument that's paying me 11.5% yield. And so I want to be in here. I want to be trading this because I know it should be at 100 because the risk profile is just so much better.
Yeah, the one thing we talked about with Matt, CEO of Strive, when we were at Cantor Fitzgerald conference in Miami, was that, he's obviously very friendly. You guys are very friendly with the strategy team, doing a very similar playbook, but with a different twist. And he said, look, strategy is going to continue to perform well, risk adjusted. It's an amazing investment. But if you're looking for, a smaller company, small cap that's doing something very similar, he's like, I think Strive will outperform, from here on out, just, investing directly into like MSTR. And so you guys have SATA, like SATA is the ticker that you mentioned. Preferred equity, very similar to Stretch in a way. Tell us a little bit about that for the audience that isn't familiar with the space as much. Like, explain like I'm five. Like you have strategies, this big whale, 1,500 employees. You guys have 31. Right now, you guys are up, I think, 12%. Strategy is also up 12% today. Bitcoin's at 73,294. Do you see it similar to Matt and just a faster moving, but like slightly higher risk, but potentially more returns?
Yeah. So we were very acutely aware of everything that strategy was doing. And we were at the forefront of analyzing everything that strategy was doing. And we were noticing that there were a lot of other Bitcoin treasury companies coming to the market and trying to do different things. And our perspective was, why don't we just do the best thing that strategy's already pioneered? And there's room for multiple perpetual preferred security issuers in the marketplace. Like I think to the insurance world, how many places can you go get a home insurance product? I could go to several different home insurers and get the exact same commodity. I could go to several different car insurance carriers and go get the exact same commodity. And so we see there's opportunity for multiple people here in the landscape. Obviously, our size and scale is way different than Strategy. Strategy's got 725,000 Bitcoin, and we have 13,000. Right? much smaller. Our perpetual preferred security is SATA. SATA is the ticker. We have 12.5% interest on SATA paid monthly on an effective yield basis based on where the stock is trading today. It's around 13.3% effective yield. And we see ourselves as not necessarily a straight competitor to Strategy and Stretch. We see ourselves as a complement. Mm-hmm. And we think there's opportunity to think about a capital structure where, you could get paid, twice a month. You've got Strategy that pays on the first of the month, and you've got SATA that pays on the 15th of the month, and it starts to emulate what a typical paycheck would look like from people that are used to getting paid, twice a month. So that was interesting. And our instrument is variable rate as well, very similar to Stretch. Our par is also $100. Our stated range is between 95 and 105, which is a bit larger than Stretch. And ultimately, we want to work towards being a very similar type of product to Stretch in the future. So in terms of growth perspective and Strategy, thinking about the possibility of Strategy 10xing their Bitcoin holdings to 7 million.
Yeah,
it's possible. I think it's unlikely. And for us, a 10x in our Bitcoin holdings, I think seems a little bit more doable. Like for us going from 13,000 to 131,000, I think is a little bit more achievable in a certain time frame. Now, obviously the risk profile is a little bit different, but our business is a little bit different, right? Strategy's got a tech AI business. Our company is much smaller. We've got 31 employees excluding Semler. And that is, we've got an asset management side of the business as well. So we've got $2.6 billion in assets under management. We've got several ETF tickers that we offer to the marketplace as well. That business is relatively young. It's only been around since 2022. So we're approaching like a 3-year track record on all of our ETF instruments that have been in the market now, which is effectively where you start to see a hockey stick in growth is after a 3-year track record. And so we think that part of the business can grow. We've also got True North, which has been rolled into Strive as well. We think that can grow and help educate the market on all of these types of instruments for businesses, for retail investors, for institutions, for insurance companies. And we think we've got a valuable value proposition, almost being like the Robin to Strategy being Batman, right? Like a sidekick that's helping, push the industry forward, whether that be communicating with regulators or working in politics and policy and thinking about how can we work together to build this ecosystem. And there's incentive for both of us to have very successful products. If these two products both succeed, Stretch and SATA both succeed, it's valuable for the entire Bitcoin ecosystem. Mm-hmm. So there's a lot of synergies there.
Yeah. So pulling this up, this is something I saw, I think yesterday. We'll go to bigger screen. But strc.live, I don't know if you know these guys.
Yeah.
Do you know who it is?
I don't know who it is. I've communicated with them before, but it's a cool website.
Yeah. I came across it yesterday. I saw like Adam Livingston retweeted, so I was like, maybe it's him under the hood, just like and I thought it's super interesting, the rotation back tester. So you have, SATA and you have Stretch, and this is going through a calculator of.
Oh, I haven't seen this.
Yeah, this is really cool.
Wow.
Okay. Just even the idea, right? I think with vibe code anything these days, like pretty, people are doing like in Perplexity doing the Bloomberg terminal was like a tweet that popped off. Obviously, it's a little more complex than that. But the idea itself, I think, is super interesting. And for those that understand, you're like, oh, most people don't know about these preferred equities. But then certainly there's an even smaller amount of people that know Stretch dividends versus SATA dividends. And then how, if you want to wait for the ex-dividend date, when you get paid off the 11%, rotate it into the other one, and then, going back and forth, or should you hold both or hold some mix of both? I think very, very interesting to see.
That's fascinating. Our decision to make this payout in between when Stretch paid out was very deliberate, and it opens optionality for these types of things, right? Like, is that the best idea for somebody? Everybody's got to make their own decision on how they want to interact with these instruments, but it gives optionality. And in my understanding of the market and which is continuing to evolve, in order to increase liquidity of any instrument, you need to develop incentives for an infinite amount of trading pairs for a computer. So you want incentive to be in and out of a certain instrument for different reasons. And thinking about having this kind of offset gives optionality for more potential trading opportunities. So that's kind of how we see it. And that's how I've always seen the strategy perpetual preferreds, like the entire fleet of them. In a computer trading denominated future, which I would argue it's mostly computer dominated trading right now today. But as that expands and gets larger, the risk profile between all of the strategy instruments will get arbed in real time. So you can theoretically calculate the risk premium in all of the preferreds in real time because it's backed by Bitcoin, right? Like you understand the relative risk profile of the entire curve. So if something gets out of whack for any one reason, there's going to be an arbitrage opportunity to bring it back in line. And so there's trading in and out of all of them. And you might sit and stretch for the long term. And if there's an opportunity where one gets out of line, you sell stretch and boom, you go sell or buy the other instrument to bring it back in line. And so the interplay of all of these instruments together and priced in risk in real time is fascinating. And I think that that is going to continue to evolve as the liquidity gets deeper and deeper.
Yeah.
That was really cool, Jody. I hadn't seen that.
Yeah.
The rotation strategy. Wow. And the fascinating thing here is both of the instruments are intended to be ROC dividends as well. So there's people that are holding this long term, thinking about the ROC dividend treatment. Then there's institutions that may not care about ROC dividend treatment, so they may be moving in and out between all of these different things in different ways. And again, it's just there's incentive for different types of trading pairs and different reasons to hold all of these different instruments.
Yeah. So super fascinating question I have that I think is also for the public is harder to grasp. They're not going to know unless they have experience doing it. So asset management. So Vivek Ramaswamy, obviously he has a, successful business career. Matt, he was at
CalPERS.
Yeah. So obviously one of the largest, pension funds, asset managers in the world, given the size of California, 5th largest economy in the world. So when you look at the hurdle rate at Strive, the side that buying Bitcoin makes sense for those that are Bitcoiners, and then the 30% CAGR that Saylor talks about. But how do you evaluate the business side? Like for you coming in, and you said you've been there 8 months or six to 8 months, like that's got to be something a little bit new to have to go through. I mean, you've obviously been on the risk side, and you're really looking at what is the likelihood that these cash flows are going to come in? Like, what's the risk of those cash flows? And that was something that Chamath on the All In podcast a couple of days ago was actually diving into. And he's like, SaaS companies are getting whacked because it used to be such a good business model because you could count on these recurring cash flows for 10 years out for Salesforce. Once you're embedded with Salesforce, the CRM, no one's going to rip it out and replace it. But then come down, Chamath is saying, okay, AI coming out, Anthropic's going to come out with new products. They're shipping super fast. They might release a CRM, a plugin that they can just put into your cloud cowork and then just does all of your emails, puts them into a nice, beautiful spreadsheet, and does all the work for you. You're not clicking buttons on Salesforce. You're not hiring a Salesforce developer. So the cash flow risk is very much real. how do you look at it now, especially with AI disruption?
Yeah, I've been yelling at the top of my lungs about this for quite a while, and looking at I boil it down to risk is mispriced in the entire equity market and the entire bond market. You look at the private credit market, you look at the private equity market, and it ultimately comes down to this AI disruption risk, which has been part of Strive's theme from the very beginning. And you think about if you were to look at cash flows into the future, the umbrella of probability of outcomes with the advancement of AI, like it used to be pretty narrow, right? You'd expect that Apple's going to have a pretty narrow cash flow expectation, but that umbrella of outcomes, the probabilistic outcomes, has just expanded drastically. So that creates uncertainty on valuation today. So I think that's what we're starting to see play out, right? Is some of that process. Thinking about our business model and how it's designed, one of the fascinating things about asset management is that there's, at least in relation to Bitcoin, is there's no downside convexity correlation. So if the price of Bitcoin goes down, like our asset management business isn't necessarily correlated to the price of Bitcoin going down. And over time, historically, you actually, because track record is a thing, like asset managers, for some reason, can't invest in several things until it has like a certain time period of a track record. Like literally, I think Matt has stated this publicly, that they'd have to have a filter where it's like, okay, I can't invest in anything until it's 3 years old. So you got a filter on the entire world of assets to be like greater than 3 years old.
Yeah.
And so having an instrument that's been in the market and trading for a while, and we've got several, like having that track record is valuable in and of itself, even though, depending on the interest in the instruments. So I think that can change and grow into the future. I think we're also uniquely suited to utilize our knowledge of the Bitcoin ecosystem and consider products for people that are interested in the Bitcoin ecosystem. So I think there's opportunity for us to lean into that and think through that. And I'm excited about that future.
I like that.
Mm-hmm.
Yeah, that's awesome. I have Jody. I'm kind of interested in this, in the True North and media questions. I honestly, as a marketer, I'm fascinated by this like owned media company and just using that as distribution. Strive acquired your company True North, which was effectively a media and intelligence platform for those watching that may not know. And this seems to signal this new trend where financial issuers kind of own their own distribution community. How does the True North media company kind of function within Strive? Is it purely educational, or does it drive a lot of the deal flow and conversions for your financial products?
Yeah, so this is evolving, I think, pretty rapidly, and we're figuring out exactly the role of True North in the future, and it's super exciting. I'm the CEO of True North and kind of managing that future here. So maybe it's helpful to give a little perspective about the company that we reverse merged into. So Strive was a private asset manager. They had these funds. They were a private asset manager. Over the last year, they raised $750 million of equity capital, and they did a reverse merger into a company called Asset Entities, ASST, which is our current ticker. Asset Entities was a tiny company. I think they were like a $15 million market cap. So you took all of this capital and you shoved it into a tiny company, right? And that tiny company, they actually had a legacy business, and it was a group of, I don't know, 5 to 7 people, and they were doing financial media. So they, in the GameStop frenzy and craze, they were creating Discord channels and working on communication and financial media, and tackling Instagram, TikTok, and Reels, and pushing out content in those ecosystems. So it's actually a lot of synergy, and the group that was existing there at Asset Entities, they plugged in quite well into True North and what we're doing into the future. So one of the reasons for bringing True North into Strive was like, this is a group of people that just started talking about this stuff because there was nobody else talking about it. We didn't have any resources. We didn't have anybody that was clipping content. We didn't I was clipping content. And now we've got a team of resources that can help clip content, think about strategy, push into different platforms and different avenues. Like we own Purely Bitcoin on Instagram, which has got I think over 100,000 followers. We've got Option Swing as well, which I think is over 100,000. I think a couple 100,000 followers as well. And we're looking about how we can integrate and spread education across all of those platforms. And on top of that, we think there's an opportunity to start bringing a lot of focus into digital credit and thinking about the expansion of how businesses can use digital credit. So leaning into the education for businesses. So we're thinking about a Bitcoin for Businesses track where we can talk about digital credit and how companies are using Bitcoin in these different instruments. So to boil your question down, having the in-house media brand, it's impossible to identify the ROI, like people spending time, because you're like, okay, if our instrument is more liquid, like I'm never going to be able to identify exactly how much capital is coming in the door. But education's not a bad thing. And the very clear component here is that people don't understand these things.
Yeah.
And they're slightly sophisticated. Not incredibly sophisticated, but they're slightly sophisticated. So you've got to be able to communicate this to several different pools of capital and talk about what the possibility of these things are. So that's where we see our role here is educating truthfully educating different marketplaces about, risk profile of these instruments, how to start thinking about capital with this new ecosystem, how to integrate digital credit, how to integrate amplified Bitcoin. What is amplified Bitcoin? What are these things that are exciting, and how can we truthfully communicate it in an honest and authentic way?
Yeah.
That I don't think has really existed in the past, right? Like if you were interested in Bitcoin in the past, you'd go on X and you'd see like, I don't know, crazy memes and like, you'd be like, this seems sketchy. This seems totally sketchy. And now you've got like a low volatility instrument with high yield. It's a little bit more easy to communicate and talk about. Like just in the past, I'm thinking about orange billing some of my family members, right? And it's like, okay, you bought it Bitcoin at 126,000 and now you got your knees chopped off. You sold at the bottom. And like, it's really difficult to explain Bitcoin to most people. And this avenue of digital credit and amplified Bitcoin and what these can do is really changing like how people can think about finance. So that's our goal, is like
love it. I guess that you kind of answered my follow-up question. It was going to be, how do you think about kind of protecting like that brand equity, True North, that is built inside of this, it's independent voice built inside of this, company Strive. But I guess you kind of answered it's through education and independent analysis. And one thing I've noticed is I really like how both your team and Sailor and Strategy, they're kind of reposting your guys' stuff and you guys are reposting their stuff. And so it's fun to see you guys complement each other, and it's not like a competition for competing products.
Yeah, it definitely not a competition, right? Like we're trying to educate the masses, and you need as many people behind microphones as possible. I think one of the difficult things in kind of bringing True North into Strive is the legal side, and making sure that people can retain their authenticity and can say whatever they want, which is very critical to us. Like I work for Strive, but all of the other people that are part of True North do not. And I want them to be able to say whatever they want to say, whenever they want to say it, almost as if like you think about Google owns YouTube, right? Google owns YouTube. That doesn't mean everybody that posts on YouTube is like a legal liability of Google. So we're trying to retain that sort of relationship. Like these are, yes, they're part of True North, but no, they're completely separate. They're independent voices. We don't pay them to say anything. This is like true, honest, authentic communication.
Yeah.
And I think one thing that, you guys have gotten flack for is like, you're coming into the space. Bitcoin has like an ethos, and Bitcoin, you have a community that's been built up, and a lot of them have said a lot of really good things throughout the past decade on, hey, all these altcoins are scam. Everyone's going to be using their own money printer if they control it, which is all true. But I think that Saylor pointed out that Danny Knowles interview that there's way too much noise and chatter being anti-companies buying Bitcoin when they really should be like trying to grow it more and, be more of a abundance optimist minded on how do we grow Bitcoin. And the thing is we had Grant Cardone on a couple weeks ago, and he's on there shilling, oh, you're not going to make your money off of single family homes. That's a terrible investment. Houses are a terrible investment. You should go own a rental property. And he's pumping his back. That's what he has. He has commercial properties that he rents out, apartments, etc. And he doesn't get that much flack for it because people take it as, okay, here's Grant Cardone, this brash Texan. He is at least showing the younger population income producing properties are very valuable early in your investing career. Which is a good lesson to have. And I think people take it with a grain of salt that like, this is his investment. So I think treasury companies and True North overall shouldn't get as much like blowback or, people in the comments saying you guys are just pushing Strive or you guys are just pushing strategy, when really you really do have to go talk about it. Like, even if you are talking your bags, but that's because you have conviction there. And I think that's something that Nick Carter, he's been talking about the quantum side, and they're like, wait, Nick, you're invested in a Bitcoin quantum, solution. He's like, yeah, because I'm an investor. Like, I truly believe it's an issue. Not that like we stand on either side of that debate of quantum, but people that are convicted in something and invested in it have to go talk about it somehow.
Yeah. And I think too, what's keeping you guys, keeping your voice distinct is that you do have those independent voices within True North. I mean, sure, you work at Strive, but you have Mason, you have all these other people that don't. So yeah, I think this is just such a fascinating thing as a marketer. I think, it's low barrier to entry. Anyone can kind of just start a podcast, start a show, and just talk about the things they're passionate about, the things happening in their respective industries. So really love what you guys are doing. And honestly, I gotta say, I'm a religious watcher of True North every week.
Yeah, we want to retain authenticity, and if anything, me working at Strive and Ben working at Strive, we have a unique perspective that nobody else has. Yeah. We are one of two issuers of perpetual preferred equity backed by Bitcoin on the planet. Right? Like, I think talking about this stuff is where this goes, right? Actually, but before we get into this tier thing, Jody, I wanted to come back to hurdle rate real quick, Bitcoin and hurdle rate, and I was just thinking about what would be helpful to explain that I don't think has been explained too terribly much about Strive, is that our management team compensation and incentives are very Bitcoin focused. And so on the short term, we're compensated in two ways. We're compensated on having positive Bitcoin yield and paying all of our dividends. And the long term, we're compensated on being a top quartile of equities in the market and outperforming Bitcoin. And that's it. And I think we're one of the only companies that has that outperformance of Bitcoin. Like, having our common equity be outperforming Bitcoin it was part of our long-term compensation. And we worked with Mstr, which is one of the top executive compensation firms on the planet, to structure this and design this in a way that was aligned with other typical industries. Obviously, this is a totally new ecosystem, but that alignment, I think, is very, very important, that we are aligned with all of our equity investors. Like, we want this equity to do well just as much as everybody else does on both sides of the equation. We want to have high credit quality, and we want our equity to perform and ideally outperform Bitcoin. So that's how we think about BTC yield. That's how we think about outperforming Bitcoin. That's how we think about just our performance indicators moving into the future.
That's a good clarification, because I know that like that's been something everyone looks at the timeline. I know Saylor, he's plugged in. He's not like living in the high castle. And I think, we've seen with Naka, so much of the community, Justin Beckler, came out with that acquisition. And it seems like people are receptive to it, right? Of, oh, I see the feedback coming in from the market here. I see what people are talking about. When I roll out a new product or when I do something new, I'm going to make sure that we address that, or, have performance-based compensation versus like, there's rumors at the beginning, I think it ended up not being true, of like a Naka private jet and like, huge cash compensation, which I do think they were getting paid in fiat, large amounts, which people rightfully you should question. That's not, not getting paid in Bitcoin or not getting, tied to performance metrics is just anti-ethos of the whole space, right?
Yeah. Yeah. And our whole company is aligned on that. I mean, we've got a small company, we could stay flexible, but our goal is we want to be a long-term outperformer of Bitcoin. And how do you do that? You maintain high credit quality and you issue perpetual preferred equity when it's available, when it makes sense, and you communicate that message broadly. It's the most efficient leverage, matching a long-term duration asset to a long-term duration liability. It's really a match made in heaven.
All right, we're going to fire it up.
Cool, let's jump into it.
All right, I got to find the best screen share we can do. Not this one. We'll go here. So, can you guys see that? Let's just go here.
We can see it.
Yeah.
All right, so what we have, investment risk with our chief risk officer, Jeff Walton. You came from the reinsurance industry. We're going to look at different asset classes. And what we have here below generally is going to be the US dollar, gold, silver, Bitcoin, single family homes, farmland, commercial property, NVIDIA, Apple, all of the strategy products. And I have stretch in there twice because the first one's hard to read. So we'll start there.
We'll call stretch 2 SATA.
Yeah. I didn't want to put SATA in there because I didn't know.
That's fair.
Didn't know how much you want to weigh in.
Just a point. Yeah, that's a good idea. That's
on it.
My lawyers would hate me. We'd have to make an SEC filing.
Yeah. All right. So Jeff, you're on top now. US dollar. Where are you putting it?
Bottom. D. Do we only have 5 categories?
Yeah. Yeah.
D. D is the worst, and D is green, which is D is bad. Yeah.
Yeah. D is bad.
It should be red.
Okay. Bottom.
We switched here.
Fiat dollars. Bottom.
All right, Halston, you're up. Gold. Okay. Where are you putting it?
Gold, I got to go with probably B.
I think it's fair. Gold's been on a run.
Yeah. Gold's been doing okay.
With war on the horizon, or has been, with Iran, I think the market, we talked about, like, gold didn't rip. And we were talking with Sam from Smarter Trader yesterday, and he's like, people are seeing, the market's telling you that this is not going to be prolonged conflict. So the fact that gold didn't rip, but it's past 6 months, historic run, still store value king.
Been around for 5,000, been around forever since like, stars exploded and gold landed on planet Earth, right? It's, it's been around for a long time. I think it might be around for a while.
I'm going to go silver. I'm going to go right now. I will also go B. I am concerned that it is a little bit hot. Historically, this was my best trade last year of buying silver call options for January. I bought them back in like June or July, and by far my best trade. But I think it's very interesting with industrial use cases of silver. I'm not like fully aware, like with solar energy and panels, like how long that's going to continue in the future. But like gold, very similar, historically really good run. Proven asset for thousands of years with all of these countries that want to move away from the dollar standard. Silver is pretty solid. So Jeff, lucky you get to go for Bitcoin.
We're gonna throw it at the top. The silver though, I did some analysis on this. They're using like computer chips, and it was, if you doubled the amount of computers on the planet at silver with the price of, I don't know, $115 per ounce, it would only take like $15 billion of capital to double the computers on the planet with silver.
Mhm.
So it's an interesting one. I think, yeah, anyway, we'll go to Bitcoin. Bitcoin's at the top. Throw it at the top.
Oh yeah.
Christine Collateral. I don't think you're going to have any arguments here. This is a Bitcoin podcast. Like, what do you?
Come on.
All right, single family homes, Halston. You have
Ooh.
this is Gen Z perspective.
Listen, don't
Yeah.
come after me, don't hate me, but I'm putting it at the bottom. I'm putting real
Oh.
estate at the bottom.
Grant Cardone, you're on his side. He does not believe single family homes, thinks they're overpriced and they're not good investment.
Yeah. Sorry, guys.
People have to live somewhere.
Yeah.
They do.
All right, so for me, farmland, last one, or next one up is, I'm a real estate guy. I was a real estate major in college. My great-great-grandfather started doing real estate 1800s. So I'll put this at A.
Wow. Okay.
Because I think that scarcity, population's growing. There's only so much land. You look at anyone in a populated country and they would love to own, their own piece of land. Mm-hmm. Also, we're talking farm. If it's potentially income producing, there are risks with that. Would have to be a long-term hold. You still have to do property taxes. We have hunting land out at Georgia. We don't have to do anything with it. It just sits there, and then we cut the timber on it every 50 years, 30 to 50 years. So it does produce income passively, which is nice. But you have to pay taxes on it. So you are beholden to the U.S. government and the state governments. Scarcity is there, though. I think you see Bill Gates, you see Ted Turner growing up, owner of the Braves, owner of CNN. He was buying up all this Montana farmland, and that's why he started Ted's Montana Grill. So farmland, I'm going to put up an A.
Okay.
If you think Bitcoin's the top, I agree. I think farmland's got to be up there. If all hell breaks loose, at least you have some land where you can grow food, and you've got it. You need to eat. Ideally, fresh water on the farmland too.
Yeah,
would be high up there. But yeah, great.
Jeff, you're next. Commercial property.
Commercial property. Oh man. In a decentralized world that's continuously getting more and more decentralized, I'm probably going to go C on commercial property, maybe even D. I would probably personally flip-flop single family homes and commercial property. But let's go C. Commercial.
I'll put you up to C.
Yeah. Commercial property.
Halston, top company in the world right now, NVIDIA. AI boom. Where are you putting it?
Oh, okay, don't come after me, guys, but I gotta go with C. I think it's great company, not a store of value.
Go with C. NVIDIA, obviously, a historic run. They're propping up the economy every time they do earnings. Going up next, Apple. So super interesting. I think conversation happening right now on X and other places is just Apple staying out of the LLM game of the hyperscalers in the same way, not spending the crazy amount of CapEx. Last 10 to 20 years, Apple's always had this very strong position of having enough, 80 billion, 100 billion in cash on the balance sheet to be able to do whatever they want. Also, people in a very big wartime scenario, famine, et cetera, they're getting rid of their, AI subscription way before they're getting rid of their cell phone. And so much stickiness. Because of that, I think they're still pretty strong. I would put them in a B. Yesterday, Sam, smarter trader, he's like, look, this is classic safe investment last decade. So yeah, I'm gonna put Apple at a B.
I like it.
Okay.
They're probably going to acquire some sort of AI company or something at some point with their cash position, do an equity transaction. I'm sure they're just sitting back waiting for the right moment to strike. I mean, all this stuff changes every week. Saylor talked about it at the Strategy World. It's I feel like I need to RFP my AI every week. It's crazy.
Yeah.
You used to have to RFP products, once every couple of years, but now it's this is all moving so fast.
Mm-hmm.
It's pretty crazy.
Jeff, we're getting you. You guys are gonna have to dive
Stride.
in on the stride side. Like can't compare between like Strife and Stride. You're more versed than I am.
The only rational thing I could say here is Stride is more valuable than commercial property, so it's at least B or higher, and I may even go A at the moment. I'm going to go B because it's non-cumulative. Just because of that, I don't know. Probably A, but let's go B because it's non-cumulative, and you need to differentiate, I guess, between the others.
Yeah, it makes better TV. You can't put them all in the same category.
Yeah, exactly.
All right, Halston, Strike. What do you got?
Strike.
8% dividend with a call option in case.
Yeah. So I mean, I gotta go A. I gotta go A for that one.
I like Strike is set it and forget it. I do like getting the income. Yeah.
All right, you got the hard one, Jody.
MSTR. So I think for me, we've talked about the show. We're all in, or not all in, but I do have an MSTR position in like a 401k that I do not touch, and I'm riding out the bottom. Avi, other co-host, also riding out the bottom. We're not selling. We bought it 300 plus.
Yeah.
But we also want, like, if I'm someone that holds, Bitcoin and cold storage and what I believe in, then if I'm going to get some juice, if I'm going to put capital somewhere else, it better be interesting. So for me, I think the investment grade risk, I'm still going to put it as a B. Like if I put it next to a gold or silver, I still think of it in that same way of like, it is a corporation. It is risk of management, what's going to happen in the operating business. But being next to gold and silver is not a bad thing, or being next to Apple is not a bad thing.
I'd agree.
I respect it. I'd probably put it at A, but I respect it.
It's probably gonna be the largest company on the planet.
Yeah. So, and I guys, I'm bullish on their operating business. Like after watching those keynotes and those panels, the first half of the Strategy World conference, I was feeling good. I think they're gonna do some cool things.
The crazy part is if they're gonna keep rock dividend status, they've got to run at a break even. So, that's true. Which I mean means that they could plow a lot of resource. If it does start making money, they could plow a lot of resource back into it. So I think you're onto something there. Yeah,
because I think they burned through almost like 100 mil last year from their operating.
But decent amount.
Yeah.
What do we have? Strife.
This is I'm going to put it at S tier, the top.
Wow.
Yeah, because
it's safe.
Is this the Dan Hillary moving liquidation preference?
No, this is I guess theoretically, Dan's topic of the moving liquidation preference, everything goes to Strife, but it's so secure. I mean, it's 10x over collateralized on the notional value. I think the price of it is going to rocket when the world reevaluates the risk profile of this instrument in particular relative to everything else. Once the convertible debt is gone and equitized by 2029 or 2032 or whenever that is, it will be the most senior instrument on a balance sheet that's probably got 1 million Bitcoin by the time 2029 rolls around. Mm-hmm. So I think it's so secure on a relative risk basis. I guess the only difference is if like U.S. equity market blows up, like that's the only differentiator between Bitcoin and Strife, in my opinion.
Yeah, that's a ton of education on Strife and Stride and all of that. I mean, that's one where we work in the space and someone calls me off out of the blue, Stride or Strife. I know the top line metrics, but I can't dive into like performance, what the price generally is at today. I think 78 or something for Strife. I mean, yet last night it was. Obviously, it's changed today.
I think Strife is at 100. Stride is around 80.
Yeah.
Stride's around 80 then.
Yeah.
All right, Holston, this is a favorite of yours. So the last two are actually Stretch.
Stretch nerd. I gotta go. It's at the very top for me. If we're putting Strife at the top, Stretch is at the top as well. Yeah. Yeah, at 11.5 trades near par. Gotta love it.
The iPhone moment. There
Yeah.
we go. All right. First time playing the tier list game. I think this is not too controversial, but here as Bitcoiners,
We'll find out.
good to compare them. We'll find out. And don't be shy about buying some farmland.
Yeah. The real estate bros might come after us.
Yeah. Tim Gottsman on his new show might come after you.
Yeah.
We love Tim.
Yeah. Holston, I know you gotta run soon.
Jeff. I gotta run, and shameless plug. I'm running to the Women of Bitcoin Summit. So, we should plug that. What was that?
Send us a link and we'll put it in the chat.
Okay. Yeah. We're live now already, so I am gonna go join that. But let me find the link real quick. Go ahead, Jody.
And I was gonna say, yeah, Jeff, really appreciate you joining. What can you leave us with? What are you bullish about between now and the Bitcoin conference the next couple months? Did this pop this morning, 12%, surprise you with either Mstr, Strive, or Bitcoin?
It's only a matter of time. You've got Stretch is trading fantastically well. The preferred equities are trading fantastically well. The market is growing and expanding for these things. They're moving on chain. Companies are wrapping them, and that capital is being used in novel ways. We're seeing interest in designs of people that are going levered long stretch, which is interesting. I think that the optionality of these instruments is exploding, and I'm incredibly bullish about that future. So I think that's where this stuff is headed, and I think we've got a lot of bullish catalysts on the horizon leading up to the Bitcoin conference. So hopefully we can get a pump up to 80K, 90K, and get back into a nice steady state of up only for 2026.
Let's hope so. So last question on this end then. Bitcoin 150K in 2026. This is one of our sponsors predicts. They're actually a Bitcoin native prediction market. They're still pricing in, or not they, but the market itself on predicts, pricing in 13% for Bitcoin at 150K. What's your percentages? What's your risk profile of this, of 150K this year?
I feel like that percentage is off. I feel like it should be higher than that, but I feel like
40 would be fair.
40%. Yeah.
So
yeah, 30-40%. Just thinking about, looking at Stretch traded $200 million yesterday. It's not even the ex-dividend date. You've got companies that are going to grow into the space. So I don't know. Thinking about this week, Strategy probably buys, I don't know, $500 million of Bitcoin, $600 million of Bitcoin. Next week is their ex-dividend date. So I think volumes could be even higher next week. That's assuming no buys on MSTR. Generally, we've seen them scale with Stretch. All Stretch sales, they'll scale MSTR with it as well. So you could be talking about $1 billion a week here moving forward into the future. And the risk profile is just getting better and better, right? As the price of Bitcoin goes up, the risk profile of Stretch gets better. The risk profile of all the prefs gets better. So the ability to go sell these instruments gets even better. You've got the Morgan Stanley just launched a Bitcoin ETF. That's huge news. You've got the halving it coming up in 2028. That's going to get here in no time. IBIT salespeople are going to be front running that like crazy. I'm sure that's like one of the best performing ETFs of all time. And we're continuing to see inflows, even though the price of Bitcoin's been down 50%. And if that keeps ripping, it goes higher. So yeah, I think that 13% seems a little low. It's possible, but yeah, we'll see.
Yeah. Leave it on bullet note. Today's a green candle day. Holston, we'll let you run. Everyone head over from here, Women of Bitcoin Summit. We'll put the link in the chat. And Chow Cow, Christine Turner, who's Bo Turner's wife, who was our guest, I think, was it last week? Good friend of mine here in Bend. And then I think they just snatched her directly off stage.
They pulled her.
Which I respect. Jeff, we appreciate it as always. And we'll be following up with this tier list. We'll drop it in the chats. I think there's a link that we can send out to people that they can put their own tier list if they want to.
Right on. Love it. Cool. Yeah. Thanks for having me. Appreciate it. Catch you later.
We'll be back tomorrow at 9:30 or 12:30 Eastern with infra, going in macro, going to the charts. And then tonight, actually, let me plug you. True North, as always, find them on X, MSTR True North. And your stream's at 7?
7 p.m. Pacific, 10 Eastern. Yeah, we're going live. We're talking about Strategy World. We're going to dive into this more. The whole team will be there. We'll get into liquidity a bit. And yeah, it'll be a good time.
Sweet. All right. We'll see you there.
All right. See ya.
Thanks, everyone.